London, May 2026. The conventional wisdom about prediction markets is that they belong to professional traders, quants running arbitrage models, hedge fund analysts pricing geopolitical risk. That consensus, it turns out, is wrong. Prediction markets have become the most transparent macro forecasting tool available to any investor, anywhere in the world. Wall Street analysts argue the signals are too noisy. The data disagrees. Polymarket's implied probabilities have tracked Fed decisions and geopolitical turning points more accurately than consensus forecasts in 3 of the last 4 cycles. In this tutorial, we are going to walk through every step of placing a yes or no order on Polymarket Trade, from finding the right market to signing with your MetaMask wallet. No prior trading experience is required. If you can read a headline, you can interact with a prediction market. Let us begin. A prediction market is a financial instrument where participants buy and sell contracts on the outcome of real-world events. Each contract resolves to one of 2 values: 100 cents, $1 if the described event occurs, which is a yes resolution, or 0 cents if it does not, which is a no resolution. The current price of a contract reflects the market's implied probability that the outcome will happen. If a yes contract on a Fed rate cut is trading at 60 cents, the collective forecast across all participants puts the probability of a cut at roughly 60%. These are not hypothetical simulations. The prices on Polymarket Trade reflect real capital allocated by real participants, from macro investors tracking central bank policy to geopolitics analysts pricing ceasefire scenarios in active conflict zones. Every market is a live, continuously updated probability estimate, responsive to every FOMC statement, every CPI release, every diplomatic development. When you open Polymarket Trade, you are presented with a grid of market cards. Each card is a snapshot of a single question, for example, will the Fed cut rates at the June FOMC meeting? And shows you 2 key prices, the cost of a yes contract and the cost of a no contract. These prices always sum to approximately 100 cents, because exactly one outcome will occur. A market with yes at 60 cents and no at 40 cents implies a 60-40 probability split. You will also see a trading volume figure, which tells you how much capital has flowed through that market. High volume is a useful indicator of how active and confident the broader forecasting community is in this particular question. Markets with thin volume can be harder to enter and exit at a fair price. Find a market tied to the macro or geopolitical themes you follow most closely, and click the card to open the full detail panel. Inside the market detail panel, you will see the full event description and the live order book. Before placing a position, it is worth being precise about what you are purchasing. A yes share is a contract that pays you 100 cents, $1 if the described event occurs. A no share pays you 100 cents if the event does not occur. So if you believe the Fed will pause despite market consensus pointing to a cut, you would purchase no contracts on a will the Fed cut market. The current price you pay represents your implied probability view. If you buy no at 40 cents and the event does not occur, you receive 100 cents, a 60-cent gain per share. Your maximum loss on any single share is always the price you paid. There is no margin, no leverage, and no exposure beyond your initial capital. This makes prediction market contracts a clean, bounded risk instrument for expressing macro views. On the right-hand side of the market detail panel, you will find the trade panel. At the top, you select yes or no, the side you want to take on this question. Below that, you choose between 2 order types. A market order fills immediately at the current best available price in the order book. It is the simplest option. You specify how many shares you want, and the platform executes at whatever price is available right now. A limit order gives you more precision. You specify both the number of shares and the exact price per share at which you are willing to transact. If no matching counterparty exists at your price, the order rests in the book until one appears or you decide to cancel it. Limit orders are preferable when a market is wide, that is, when the gap between the best buy price and the best sell price is large, because a market order in a thin book can fill at an unfavorable price. For your first order, the market order is the faster path. Once you have selected yes or no and chosen your order type, you will enter two values, price and size. Price is relevant for limit orders. It is the per share amount you are willing to pay, expressed in cents, and must fall between 1 cent and 99 cents. Size is simply the number of shares you wish to purchase. The platform immediately displays an estimated cost, your price multiplied by your share count, and your maximum potential payout, which is always your share count multiplied by 100 cents. For example, 100 shares at 40 cents per share costs $40. If the market resolves in your favor, you receive $100, a $60 return on a $40 position. These numbers update in real time as you type, so you can calibrate your position size precisely before committing any capital. Take a moment here to confirm the numbers align with your intended exposure. Before your order reaches the matching engine, Polymarket Trade presents a clear order preview screen. This summary shows every material detail, which side you have selected, yes or no, the price per share, the number of shares, your total estimated cost, and the maximum payout if the market resolves in your favor. This is your final checkpoint before signing. Review it carefully. One common source of confusion for new participants is the cost display. The platform shows your net capital at risk, not a gross notional figure. What you see is what you will pay. Confirm the market name is exactly the question you intended to take a view on. Confirm the side yes or no is correct. Confirm the share count matches your intended position size. If anything looks incorrect, go back and adjust before proceeding. Once you are satisfied with every line of the order preview, you are ready to move to the wallet signature step. When you click to confirm your order, MetaMask will prompt you for one or possibly two signatures, depending on whether your trading session is already authorized. The first signature, if requested, is the ClubAuth session signature. This is an EIP 712 typed data signature that authenticates your wallet to the Polymarket order book for the next 30 days. It does not move any funds. It establishes your trading identity for the session. You will only see this prompt once per month. The second signature is your actual order signature, another EIP 712 type data message encoding the precise parameters of your trade, the market token identifier, the side, the price, the size, your wallet address, and a timestamp. When you sign this, you are cryptographically committing to the exact trade terms. The Polymarket matching engine verifies this signature server-side before the order is accepted. Neither signature on its own transfers capital. Settlement occurs automatically and transparently when your order fills and the market resolves. Once you have signed your order, execution is fast. For a market order, you should see a fill confirmation within a few seconds. The order is matched immediately against existing liquidity in the book. For a limit order, it appears in the Open Orders section of the My Activity panel and remains live until a counterparty matches your price or you cancel it. Filled positions appear in open positions, showing your entry price, the current market price, and your unrealized profit or loss in real time. As the underlying event develops, a new FONC statement, a GDP revision, a ceasefire announcement, a shift in treasury yields, the market price will move, and your position value will adjust accordingly. You can exit any position at any time by placing a counter order on the opposite side, effectively selling your contracts back into the market. Prediction markets are continuous. You are never locked in to holding through resolution. That is the complete order placement flow on Polymarket Trade. To summarize, navigate to a market covering a macro event you follow, whether that is the next Fed rate decision, a central bank inflation forecast, or a geopolitical probability. Select yes or no based on your view, choose market or limit order type, set your size and price, review the order preview carefully, and sign with MetaMask. Your first signature authorizes your 30-day trading session using the EIP 712 standard. Your second signature commits to the specific trade. From there, the platform handles execution, settlement, and position tracking automatically. You can follow your position in real time in the My Activity panel and exit whenever you choose. If you found this walkthrough useful, subscribe for the next episode. We will cover how to cancel an open limit order and how to close a position before market resolution. The link to start trading and the Telegram channel for live macro signals are in the pinned comment below.